the art and science of recording, classifying, summarizing, and analyzing costs and controlling of costs. The application of professional knowledge, techniques, and concepts in preparing the accounting information to help the management in decision-making process.
For example, when the production department looks at the previous year budgeting report and find out that the department had not used it very well, therefore, for this year, the department will come up with a new decision on how to reduce costs and generate more income for the production. For example, the management department has all accounting data. Hence, other departments can easily retrieve information from this department to make decisions. For example, the production department calculates the cost of production by using the currency of Ringgit Malaysia, and it only involves the cost of data. For example, a budgeting report is used by the finance department to determine the cost and also the information whether the company is able to generate income for next year. For example, the production department will make a decision based on the previous year report to prevent any over or under budgeting that may lead to the loss of the company. For example, the descriptive historical information is used to analyze predictive information such as staffing levels, which can be made before things happen and before minor problems become big ones. For example, activity-based costing is used to identify all activities that the organization performs to measure the use of resources associated with each activity used to determine its cost. For example, financial reports are prepared which utilize scientific and statistical methods to arrive at certain monetary values which are then used for decision making. For example, if the production department aims to increase the volume of production, it only needs to refer to historical information to determine the cost of production. For example, without cost accounting, predictive analysis cannot be retrieved to make future decisions.
For example, cost accounting a forecast estimate the raw materials, indirect supplies, and labor needed on the production line. For managerial accounting, a forecast estimates the total number of units you expect to manufacture for each product and the number of units you expect to sell. For example, cost accounting records the actual cost of your direct and indirect labor and materials for each production run. You then match this against the sales revenue reported in your managerial accounting reports. For example, the cost accounting raw materials account and the managerial accounting office supplies account are considered asset accounts. For example, you develop your cost accounting budget by analyzing the actual cost for recent production run. You then incorporate that information into the managerial accounting budget to create a company-wide budget of your estimated long-term revenue and expenses. For example, the cost accounting report is made to estimate costs in the production, whereas management accounting report is used by the management to improve the performance of the production.